Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, today again we'll take a look at the euro currency. Also guys, I briefly will show you all other currencies in Great British Pound, Australian dollar, New Zealand dollar, because all these currencies have the perfect steps for trading. So you can see that markets across the board is turning to the active stage where changes comes very fast, and because a lot of activity stands in major authorities that regulated the financial markets, so central banks, governments. So it's all make an impact on the overall situation. First of all, I would like to say that don't panic. This is not some collapse as right now some mass media would like to interpret these events. This is quite different story compared to 2008, where it was the real crisis, while here is a normal process of the changing of the business cycle. So a lot of time I have spent previously at the analyzing of the long-term business cycle that is based on the interest rates, commodities, stocks, and currencies. And this is normal process. I mean, the share market is dropping for inflationary growth stage of economy. So what usually happens on the first stage when the global economy turns to the upward direction? Rates stands low, inflation starts to rise unstably, and major central banks keep rates unchanged on the low rates. That is the just gold time for stocks market, because borrowing costs are low as rates stands at the minimum levels. That lets companies to borrow lots of money and spending on the development of the companies, or even by buying their own stocks. It's also was the issue on the stock market in this cycle. Also, don't forget that the Fed Reserve, European Central Bank, and other central banks put a lot of liquidity in the economy, and major part of this liquidity was spent on the stock market. So when the central bank stands to raise the rates, the borrowing costs increasing, and stocks market starts to feel the pressure. And that's what we'll see right now. So this is the second stage of the global upward cycle. This is not the crisis similar to 2008. So in the crisis, this was the drain of the liquidity. This was just run to liquidity, and the sell-off is coming to get the liquid assets to accumulate it and just to pay out the debts, some borrowing money that has been spent for the leverage or something of that sort. So here is a different story. It's a bit confusing why the Japanese yen is rising on the background of that. But first of all, the Japanese yen has risen yesterday just due to retracement on United States Treasury bond yields. So this is just was the cancellation. This has happened in one time. So some starting dropping of the currencies, and simultaneously a retracement has come on the bond yield, and that has triggered the demand for the Japanese yen. That is temporal event, because as rates will continue to hike by the Fed, but there may be European Central Bank soon. This will press on the Japanese yen, because this will make the carry trade more attractive, because investors will be able to borrow the yen at the low yields of the Japan yields, sell the yen and buying the United States dollar and put them in the United States assets that gives significantly higher return. This pressure of the carry trade will start to impact on the Japanese yen, and that will limit its upside potential. So maybe yen will turn to dropping in the long-term perspective. So this was mostly technical situation. It's not quite run to safe haven as it was in 2008. If you remember, in 2008, as in the United States and the Japanese, the rates were at the 0 point. That's why the demand for the safe haven exits was not due to the just retracement in the United States Treasury yields, but it's just run to the quality, right, to this run to the safe haven. Just was the question of the return of the assets, but not the return on the assets. So it's quite different story. And yesterday it was just mostly the just agreement between the different events. But soon probably yen will turn to the normal behavior. So actually, guys, all this stuff around fundamental events, fundamental business cycles, and the background of the explanation of the fundamental events has demand a lot of time. And Betty, if you have some questions, please put it in the forum. I will try to answer. Currently, guys, it's a daily video, and we're mostly interested in what is going on here and what we could do in the short-term perspective. So first, let's start from the euro. As you can see, our suggestion of the possible final high spike here has failed. Although in the beginning of the session on Monday, euro stands not bad. It was holding above our levels. Even the upward reaction has started as market has opened here. You will see it on the intraday charts. But soon, as pressure has increased, euro has turned in the major tendency where forex market right now stands. That was not something really unexpected, because you remember within the whole month we were talking week by week about the common retracement. That retracement is ripping up, and it should happen very soon. And don't forget, guys, that we stand at the monthly confidence resistance. We already have the confirmation pattern of this retracement. It's butterfly sell. We have the weekly overbought area. And that was just a question of time where it has happened. But right now, yesterday we've got the final confirmation, because yesterday the daily trend has turned bearish. So currently we do not have even theoretical context for trading euro currency on the long side of the market. So it means that currently we need to start chance to go short. Our minimum target that probably should be hit by the euro currency is 121.50 confidence support, because this is our conservative suggestion, conservative retracement. We have discussed three possible ways of retracement in our weekly research. The first one is the just most painless target for the euro currency, because that will be the 3/8 retracement of the butterfly's normal reaction on the butterfly. If market reached the 30% retracement, it treats as a completed butterfly. So reaction is sufficient, and market could turn to some other action. But you can see that this target stands below the daily average sold, and it means that hardly it will be straight down action. First, we should keep an eye on 123. That probably will be the floor for trading on the current week. So, as we have estimated the direction for trading, we need to take a look how we could take the position. So, on the hourly chart, we see that market stands in the downward action. All right. So currently we have some support that you do not see on the daily chart. This is weekly pivot support one. So this green line. And also, if you will take a look, market has completed kind of the ABCD pattern. So even slightly stands below this target, but approximately around it. So here, guys, by the way, the behavior of the pattern that we have talked about in our weekend. So you can see indeed when the market has opened, it has kept our suggestion that probably upward action could start, and indeed this market even starts to action. But when the pressure comes to the market across the board, and the Great British pound starts to fall, euro currency is also turned to the major direction, and this our suggestion has been erased. So the setup that we have discussed has been cancelled by this drop. The market has taken out of these lows. That was important fib level. Also has broken the channel that we have discussed. So we've got the confirmation of changing of the major direction. Now, for taking the short position, we probably need to wait some retracement up. So first of all, it's level 124 is the 3/8 resistance of this most recent leg. Next level stands very close to the weekly pivot point, and it's 24.20 approximately. So it's confidence resistance. So very probable that these two levels will be the point where a market could turn in a downside direction or establish downside direction, and that the levels that you could keep an eye on for a possible take into position. Well, since market right now on the daily chart is not at oversold yet, so it actually has no significant support except maybe these lows. So already market was standing. So hardly here we will get some very deep retracement. Probably it will be one of the two levels that we have specified, are the most closed retracement or confluence. Hardly it will be higher. So that's what we'll see on the euro currency. On other currency, guys, first of all, in Great British Pound, you can see perfect double repo sell pattern is developing. It has almost hit the target, but it could be just the beginning, so the starting pattern for this drop. Probably the retracement will be deeper. Here we have this double repo sell. On the New Zealand dollar, the same story. You can see also double repo sell, so I don't have the 3x3. I will show you just a minute. And market right now stands also in, you can see, minor upward retracement. That's why you could use this retracement for a possible taking short as well. As you can see also very good doubles. Here was the confirmation candle right on Friday. So double repo sell also is perfect pattern to suggest downside action as well. So you can see across the board we see approximately the same setups. On the dollar index, we have the same butterfly on the weekly chart and the upward retracement. Different story on Australian dollar, guys. On Australian dollar, we have a bit different pattern. Just need to find where my page with the Australian dollar. Here it is. Here, actually, guys, we have the potential bread and butter opportunity. Although it is not it's not perfect bread and butter, because take a look, we already have 1, 2, 3, 4th close below the 3x3. This is not typical for the bread and butter. Usually it should be 3 closes and reaching of the fib level. That has happened yesterday. And take a look, that market stands also extremely oversold, but price action is still dropping. That's why it seems that pressure right now is very strong. And if you still would like to trade it on upside retracement, you need to get some more confirmation of this trade, maybe clear bullish patterns on the intraday charts around strong levels or something of that sort. Because take a look, that pressure on Australian dollar is very significant, and trading on the Brent body here will be a bit more risky than unusual. But our major focus, as I said, is the euro currency. So let's see how the situation will develop here, and keep an eye on this possible retracement that could happen here. So it'll be an opportunity for taking the position.